The markets are continuing to struggle to regain some footing here. We are seeing crypto dip below some key levels, a slight bounce back above. We're going to be discussing that in what is a relatively boring market today on Money Never Sleeps. Welcome back, everybody. Happy Wednesday. As we get going, do us a favor. Hit that like button, subscribe to our channel, and remember that nothing Kevin or I say is financial advice, so please do your own research. Kevin, hump day, a boring day in the markets, not a whole lot going on from an economic data standpoint. We didn't have any reports today. We got the beige book, nothing too crazy in there. I was briefly glancing through it. What are you focused on? We saw crypto take a bit of a hit earlier, move below some key levels. It has now bounced back above those. Bitcoin went below 60, ETH went below 3K, Solana went under 130. They have regained those levels since then. Is this going to be something that we continue to see this tug of war back and forth, or do you see it making a sharp move in either direction?
Both, which sucks to say. I think that we are going to test back underneath that $59,000 level. I think once we stay consistently under, that 60K into that 59 range, we're going to 52. I honestly think that could happen in a single day. I can see a point where Bitcoin sells off $8,000 to get to that next level of support because we haven't built any support on the way up. It was just green lines straight up. That being said, we know that the halving's coming. If we want to take the halving for what it is, there is usually a bit of a pump after the halving. We could see one more rally up, and I'll pull up my chart right now for Bitcoin just so we can see it. I think that there is a case that we could make that the markets do rally a little bit just because of how oversold everything is. Now, the question is, why does this rally? And it's probably going to come down to the stable coins, like I said last time. But we came down, we tested this. If this ends up being a parallel channel, and obviously this is a bear flag, 100% higher highs and higher lows, and we're looking at it from this low, this high. So obviously we'd be looking to put in another high. That could put us around 74.5K for BTC. And honestly, that would have to be something like this. It'd have to be like an ABC pattern that gets us up there. And then after that, it's 5 waves down. But that is just one scenario. The other thing that happens is nobody just comes in to buy this market. And I think that's very likely right now, because if we're looking at the equity market, we know that the blackout window is happening. We're seeing consistent pain across all of, I would say, the global markets. And we got news yesterday of something that could absolutely be a huge catalyst for, a bit of a sell-off, and not just in equities, but in crypto. I'm going to pull up this article right now, but it's Canada and their capital gains tax.
Leroy Jenkins. What up, Leroy?
How's it going, man?
This is a fun one, Kev.
Yeah, capital gains tax in Canada, another blow to productivity, says economists. So pretty much if you're making over 250K in terms of capital gains, what it used to be was 50% that would be taxed. Now in Canada, it's 66.7%. You keep that, I don't know, extra 33%, or if you'll probably go down even a lot more over the next few new bills that they'll probably institute in the next few years. But that's an absolutely fucking sane tax rate for a capital gains tax, especially over that amount. Again, when we think about this as housing, we think about this in equities, we think about this in crypto. And crypto is why I'm bringing this up. It's because we have the crypto market at an extremely high level right now. And this new capital gains tax goes into effect, I believe, June 25th. So between now and June 25th, do you think they're going to fucking take the 50% tax, or are they going to take the 67% tax? I don't think the market's going to be strong enough to hold this price up that long. And even so afterwards, is it going to really push up that much more? Yeah, we have to question that. I think it's more likely that they are going to take some off the top, especially if they're still exposed to these markets.
I don't know. I kind of go back and forth on this one. Like, are the people who have enough money and who have enough to sell, are they not going to have a way to get around some of this? Right? Like, people who have market moving amounts of crypto or amounts of stock, they always find a way to minimize their tax obligation. So I don't know if I buy this one in the next few months having as big of an impact as, say, everything else going on with Japan, or the fact that, interest
Oh, for
rates
sure.
here are causing all sorts of problems. So I think in the grand scheme of things, I don't know. Like, is it shitty for people who live in Canada? 100%. Like, listen, America's not the greatest place in the world. I'm just happy it's not Canada at this point in time with some of the economic stuff going on there.
Yeah, what I'm saying though is I think it's more likely that people will take profit as opposed to buy into the market this high up, right?
Yeah, I,
If
I
if you're
I think money coming in is that's a big question mark right now. Like,
yeah,
who's we see the instant, like, I'm curious. I don't see as many tweets over the last week or two
nothing.
touting the inflows coming into the Bitcoin ETFs like we did a few weeks ago when the price was around 70K. I haven't seen as much of like the outflows either. But if the money's not coming in, and people start to see the price, like if we get consistently below 60, let's say we're hanging out in the 57 to 58 range for a while, are people who bought that ETF going to be like, you know what, screw this, we want to have our cash and put it somewhere else while yields are higher? That to me is the bigger concern, is the institutional outflows that could happen as a result of a big spike in volatility. But it's just my personal opinion.
No, I completely agree. And just with this capital gains tax thing too, it's like, do you want to? I mean, maybe you bought at 19K. Do you want to take some profit right now and keep half of it, or do you want to, take some profit, $30,000 lower, and you don't get to keep nearly as much? It's just a kind of a thing where it's like, I think it's putting people in a situation where taking profits is probably going to be more lucrative than staying exposed to this market at this point. First off, the capital gains tax is not going to resolve anything. If anything, it's going to cause a lot of wealthier people to try and maybe move out of the country. It's very possible that we're going to see a lot of expats in Canada fairly
I
soon.
hear the Caymans are lovely this time of year.
Yeah, I mean the Caymans are nice. What else is there? The Bahamas. There's a
Pretty
lot of.
fun.
I mean, we talked about it. I think we were talking about this on the chat. But Caribbean Com, you can buy a passport in the Caribbean. You can get exposure to all of those 15 countries. You can live in any of them. And once that goes through, that's going to be a huge move for I think a lot of crypto people. But yeah, I mean, I think that the situation for Bitcoin and is more likely to, let's say reasonably, if it's trading the pattern, it'll go up to that 74.5 level. But if things are the way they are, the way they probably should be acting, but they won't because they're just not. And that's just kind of double speak for saying that the market's in a fucked position right now. I don't know if that money's going to come in and hoist that price up as high as we think. It could just be a small bounce, and then we could just lose that 60K level. And guess what? We're at 52 before you know it.
Yep. I want to talk about something real quick that is really grinding my gears. So
Oh, yeah.
I was looking through some articles. This week the focus on earnings has been around in the financial sector. We've seen JP Morgan, Wells Fargo, Goldman, some other big ones. I was reading about, the banks and how they've seen a real struggle lately with their earnings, and it's caused valuations of the stocks to go down because they can't get away with only paying out 0.01% on checking accounts anymore. And that to me right there pisses me off. The fact that like they're getting all butthurt because they can't screw people over time and again, which has been the case. I mean, if you've been paying attention for any amount of time, you've known that holding a sizable amount of money in a checking account or in a savings account through one of these major banks is usually a losing proposition. But now more people are getting wise to that, which makes me happy. Makes me happy that the Joe Schmo like myself and Kevin, have started to pay more attention and are being a bit smarter with their money in these times. And it really makes me happy that the banks are hurting because they can't fuck people over anymore. So, God bless them for that. But just a little rant that I wanted to go on, something that really pissed me off today.
Yeah, man. It's you said it perfectly. They are not benefiting from others because they can't screw people over. And
They can't profit off of ignorance as much
no.
as they used to. And that is great in my book.
And the other problem is there's a lot of money that's flowing out of these banks, right? Obviously, the money markets, it's also flowing out because people are probably spending more, dipping into those savings. We know that there's a lot of debt out there, but they're also not issuing debt, which is how they make money. You got rates at 5.5. We're talking about higher for longer for a period of time. I think we're in a kind of a shitty position for the banks. And again, the banks go, everything goes. I don't care what anyone says. I think that's the reason why we will see rates at zero before we really know it. We keep saying, Jim Cramer's out here saying that it's more likely we get one rate cut this year. And I don't know if that's going to be the case. I think it's more likely that we get as many as necessary to stop the bleeding.
Your
And,
Jim
and
Cramer
again,
voice just makes me so happy.
yeah. It's almost like you seen Problem
It's
Child,
very
right?
raspy. Yeah, oh, of course.
Yeah,
Like Gilbert Gottfried.
Gilbert Godfrey when he puts his shoulders really up high. But
Yeah, I'm looking at the rate expectations now, and it's still, market is now market is still pricing in 3. From what I'm seeing, from the data that I'm looking at, the market still thinks we're going to get cuts in September, November, and the odds, later this year that we're not going to have any cuts at all are pretty low. So the market seems to be in the 1 to 3 rate cut range. If we don't get any, it wouldn't shock me. Or if we get multiple big ones because the shit has hit the fan, that wouldn't shock me either.
I think it's multiple big ones, but again, I could be wrong, but it seems like there's things screaming across the entire globe that are saying, we're kind of in a shitty spot. And this is probably another one that adds to the thing we're talking about, where the U.S. is going to have to cause equities to come crumbling down in order to save treasuries. We're seeing fund managers selling bonds at the fastest pace in more than 2 decades. The last few times, July 2003, November 2015, April 2024, which obviously that's where we're in now. I have to go back into these periods of time to see what was actually going on. I just pulled this up on Twitter. But them selling bonds, Japan selling, U.S. Treasuries, this debt is going to come. It's going to come to roost. I think we're going to need a lot of that money flowing into this U.S. government. And I will say this: even though we're seeing some red in the equity market, it's still extremely fucking heavy, right? We haven't seen a real major pullback. We've seen some pretty good selling. They're selling every single rally they get their hands on, but we haven't seen something major to the point where we're down like 10% before you know it, right? We haven't got a limit down morning or anything that's kind of spooked the market significantly. Think we are I've said this before, we're in the conditions perfectly where we could see that, where the equities have to go right into treasuries, and we're seeing these fund managers dump right here. I don't know, guys. I think around 5% is a pretty damn good yield. Especially if you can get some of those 10 years and you get, 5% for 10 years on capital. That's amazing. You probably won't see that for some period of time after this cycle. So I think them doing this is just another thing where they're just chasing the markets. They see people are dumping them, so let's dump them as well. And then they'll be chasing it on the way back to zero, because that tends to be what happens. People are more reactive instead of proactive. And, I think we're not far off from this. We're not seeing the yields too bad today, but I definitely think that we're going to have to keep watching how these Asian markets into the U.S. Open play out, because if it starts being just a bloodbath and yields start going up once again, you're asking for trouble in terms of the equity price here in the U.S.
All right, let's, we can keep it short today because nothing too crazy going on.
Red Lobster.
Oh, God. R.I.P., man.
Man.
I'm going to miss those Cheddar Bay biscuits.
I was about to say, quick, get the biscuits, as many as you can.
I know. I wonder if they'll still sell the box of those that you can bake at home, but they're never as good. They're never as good when you're sitting there, you get your little shitty Caesar salad, and you get your fresh Cheddar Bay biscuit. Ooh.
And then you get that smell of fish walk right by you to the next table.
I mean, listen, it's
warm
tough time,
fish.
it's a tough economy, and they offered up all you could eat shrimp and didn't think they were going to lose money on that. Like,
only 11 million.
People were showing up lined, they had their pockets lined with Ziploc bags, and they were just shoving shrimp in there so that they'd have lunch the next day. I mean, what terrible timing on their part.
Do you see what they lost? $11 million.
Just on shrimp. Can you imagine losing $11 million on shrimp? That's crazy.
It's insane. I mean, I like shrimp. I went to it 2 times ago.
It's not like they're using top of the line shrimp. Like, how much are they paying per pound? And then how much were they losing on that promotion? That's crazy.
I don't know, man. It's a sad day. I hope they're still around. I think they should be around. But it's another thing where we're seeing a lot of these middle class, restaurants, people that used to go out to eat, right? It's getting expensive. You got to tip people more now because they kind of expect it because of the whole pandemic. Let's help everybody out. We kind of never got off that, that rocker where it was like, oh, we got used to people tipping more than usual. And now it's kind of like, well, now I don't have as much money as I did in the pandemic. It's cheaper to eat at home. And it's just you're seeing the middle class absolutely react, if anything, to this. And I think that it was also with Outback where they were starting to see wealthier people eat at those locations, and then they were seeing the middle class individuals just not eat there whatsoever. So people are definitely peeling back. They're cutting back. We're going to see this across, Olive Gardens. We're going to see this across, Red Robins, like those types of chains that are out there. Um, Once again, shows you that the consumer is not strong, and when they get free shrimp, they're going to take advantage of it and milk the shit out of that Red Lobster. Uh, I guess lunch special, dinner special, whatever. I think it's a lunch special, but it's problematic for all these places, right? Bad consumer means bad business.
Oh, R.I.P. Red Lobster. All right, let's look at the crypto charts for a little bit. We don't need to belabor this too much.
No.
We're back above those key levels. We're seeing a little bit, down a little bit. I'm not looking at some of the hourlies for the
Oh,
majors right
before we
now.
get into that, let's pull this up real quick. Guess what happened in oil today?
What happened in
Big
oil
dump.
today?
Look at that chart. Came down like over $3 or $3 exact. Yeah. So remember we were talking about how oil could be topping out here. Yeah, I said that it could go up higher, but at the same time we had to be careful because Biden said that they weren't going to fill the petroleum reserves.
Mm-hmm.
Every time he says that, right after oil comes falling right down. So I'm really interested to see if that is something just momentarily so they can buy at a cheaper price, or if we're actually going to start to see that, hey, maybe the demand for oil isn't as great as we thought it was, and maybe the price is going to start chasing the consumer to the downside. I don't know, but this is really interesting. It's quietly going under the radar today, down 3.5% and going down even further. I'm very excited to see if it holds this 50 moving average, and if it doesn't, you're at the 200, and those are very close to each other, so you might be trapped in there before you see another leg down. But oil could be game over already. It could have been put in a lower high as well, as it did a lower high here too. So maybe we don't get up to the 94 level that we thought.
Whew, okay. Let's go to crypto. Let's hit that. Let's hit Bitcoin. Let's look at ETH for a hot second if you want.
Let's pull up ETH first.
Bitcoin dominance is going down on the day. We're seeing it around 1% down. Bitcoin getting hit harder than alts on the day on the daily. But what are you seeing here? We're still in. I can't keep track of the ABC 1, 2, 3 waves in which direction we're going. It's too much for me, Kevin.
I thought you were going to go into your Michael Jackson right there in Jackson 5 ABC.
Getting ready for it. If the market gets much more boring, this might turn into like fucking karaoke YouTube show.
Oh, that'd be amazing. I'll do some Creed. Yeah, I'm just joking, guys. 2400 is the level I think that we're going to be watching, right? I think that it could wick down to that. I think between that 2400 and right here, 2706. That's kind of my range where we'll probably stop off first for ETH. Now, I think that only happens if Bitcoin tumbles down, right? So that means in the short term, we could get a bit of a push to the upside. Not saying anything significant. I know some people, I think Crypto Capo, who I respect, he's got some TA out there where he's saying that, there's going to be a bounce here. And I'm like, that's a good level. But his level is a lot higher than mine. His level's like around, I think 41 or 42. I'd be, don't quote me on that, but it's around that level. I don't see that for Ethereum. I don't see that for alts in general. I think that more likely we're going to put in a lower high from here, and that might be to 3302 and get rejected off the 50 moving average. That's just my personal opinion. I think the volumes are coming down, right? If we do get a bit of a rally, it's probably going to be weak, in my opinion. And after that, we might see a bit of a pullback. And again, I think that Bitcoin probably has the best chance of rallying out of any of these right now, which means that the ETH BTC pairs and a lot of these other BTC pairs probably won't grow as much as possible, and that will also put a little bit of a dampener on the price in USD. Now, I think that will probably be trapped in this range here. Maybe we go down to this limit and then we get bought up, and then we kind of trade in the sideways range between the 15 to 200. But then again, I think that we are in this trend to the downside. We can look at this on the monthly for ETH. And I say the monthly because this is kind of the macro time horizon you have to have at this point. I think we're going to be filling out this C wave, and we're going to head towards our bear market bottom. Could take 6 months, could take 8, could take 12, right? I think it's within the next year we will be at the bottom for ETH. But again, Bitcoin dominance, even though it's not as high as it once was, it's still relatively high. But there is something else we need to keep an eye on, and that is USDT dominance. Now, we've been talking about this for about 3 weeks now. and we can see that it bounced right off of that low, and it's at 5%, just under 5%. It was a lot higher today too. I think 5.12. Why is this important? Well, this means that people are selling off and they're holding stables, right? Um, we've seen this before where it's about balance, it's bottomed here, and then June 2021, that was the summer low for Bitcoin. Same thing here, November 2021, that's the Bitcoin high. And then after that, January 2022, this is around the time Ukraine war, into June of 2022 was the low. FTX is right here. So once you get away from this trend line, bad stuff usually happens in crypto. That's all I'm saying. And right now we're, I guess, overbought on the daily, but if we look at this on the monthly, we are not even close to being overbought. We are right at the bottom. We're starting to turn this. I think that we could see a few more months going up into 6-7%. And if it does get to the point where we're seeing financial collapses and this bear market bottom, we are probably going to put in a new high for USDT dominance. Seems like we've been working there for a period of time, right? It's only putting in higher highs and higher lows for a period of time. Eventually, do I think this will crash? Maybe if Tether gets sanctioned. I'm not going to say that's the reason why it does, but this is kind of the pattern we have to follow right now. I think we're going to start pushing up over the next few months. And then if something bad does happen, I think it's going to be a massive green candle, maybe a wick up. We can go as high as, maybe 10% or so, which would be insane to think that 10% of the entire crypto market cap is pretty much, sorry, I lost my train of thought, is pretty much due to Tether. People just being scared as shit and stabled up. Again, that could change, stable coin regulation or anything like that, but it's something we need to watch because that's probably given the game away more than anything else. I mean, if you had just followed this in the past, you would have known every time when Bitcoin was at the top and every time that Bitcoin was ready to absolutely just tumble down. So that's your little cheat sheet in crypto, I think. USDT dominance. So we'll keep an eye on that. Is there any other alts that we could take a look at, or any total market caps that we should take a look at before wrapping up today?
I mean, total market cap is down more than total 2 and total 3, just with Bitcoin kind of leading the losses today. I don't think there's anything
I will say this.
like, I don't know if there's anything actionable at this point. Like, this isn't a time, in my opinion. I'm not buying anything. I made some buys on Saturday. I'm not buying today. I'm not selling anything either because I'm not looking to take on any capital gains, but that's a personal thing for everybody. If you think it's going lower and you want to lock in some profit, it's never a bad time to sell.
Definitely. Let's just finish it off with this then when it comes to total. Look at bearish engulfing candles on the monthly. That's interesting. Keep an eye on that. Total 2, bearish engulfing candle completely. Going to be very interesting to see how this one plays out without Bitcoin. Again, if Bitcoin goes up but the alts don't rally, probably going to be bearish engulfing. That might be telling of where we could be heading over the next few months. Total 3, obviously this was a lot lower. Alts have rallied a bit since that low that we got on Saturday, so I'm not surprised, but I do think that there's a good chance we can get closer to this bearish engulfing towards the end of the month. Again, if Bitcoin rallies, I don't think the alts will rally as much. And, we have that 50 moving average down here. That might be a target over the next few months. But as far as I'm concerned, I don't think we're putting in a high in the total 2 or total 3. I think the highs are in for this B wave, and we're looking for a low in the C wave. So think a little bit lower. I think that we are going to get to a point where it's going to be perfect buying opportunity, and we'll be able to tell on the charts. And what we'll use a lot of the time, as long as Tether stays alive, is we'll use this to see how high up it actually gets. If you put in a new high, then it's probably okay. Altcoin market, Bitcoin, all that stuff is bottomed. Might be time to think about going into maybe into crypto at that point. But right now, I think we're just waiting to see how this reacts. I've seen a lot of people who are saying that this is a perfect buying opportunity for alts. I can't guarantee you that. I think that if anything, this might be arguably one of the worst times, especially with Bitcoin just being still relatively stronger than everything else.
I think there are enough signals to indicate that we're going to have, I don't think alts are going to suddenly just skyrocket out of nowhere. I think we're going to have a period of time where things are pretty boring and we can accumulate alts. And I haven't started DCAing yet. I think it's going to be coming soon. But that's going to be my approach. Is I plan on DCAing fairly regularly here in the coming weeks and months. So that's kind of where I'm at with it. We'll see if it plays out well. It did the last time the markets crashed 2 summers ago. So maybe it'll work out for me again.
Take it as an opportunity. That's what I'm doing. just going to follow that USDT chart, man. I think that might be, if there is a cheat sheet, and I think that there is when it comes to this stuff. Maybe not so much once we start getting ETFs of XRP and Solana and ETH in the future. But for right now, I think that's just being smart and not being too rash, because I think a lot of people are being rash here too. I mean, sure, it's dipped 20% over a period of 2 days. Doesn't mean it can't dip another 40% over the next 3 or 4 weeks, right? Just something to be patient and just know when to deploy. And, DCing, I don't think is a bad opportunity when it gets to those levels.
All right. That is going to wrap it up for today. We'll be back tomorrow, same time, same place, looking at some housing data, some jobs data, a little bit more interesting news in the markets, hopefully. But appreciate you guys for joining us today. If you haven't yet, like, subscribe, comment, all that stuff. Stay safe in the markets. It's getting a little bit weird out there, and we'll see you next time.
Take care, everyone.